Hi, welcome to this episode of Talking Tax with Alex. This is going to be a quick episode that's just an IRS update about a video I just made recently about the employee retention tax credit. I'll link up that video in this video so that you can watch the full coverage. This is only going to talk about section number 4, what the IRS has published. So in that video, I talked about IRS warnings. Well, another one has just come out a couple days ago, and it is, again, the IRS alerting businesses and other groups about aggressive marketing and ERC scams. Here's a citation, and here's my summary of it. So the IRS has identified that promoters are luring victim taxpayers with aggressive marketing, radio, television, online phone calls, text messages, you name it. In my practice, I've heard clients talk about it. They come ask me about it because they keep getting flyers, advertisements telling them, hey, you qualify for this credit, because they just are getting bombarded. There's even direct mailing that looks like official IRS correspondences. And how they're luring victims into this is they're leaving out key details. The ERC is very complex. There's a lot of rules, and there's very little regulations and guidance. I covered this in my previous video, so I'm not going to cover that here. So here's some warning signs that the IRS is alerting taxpayers to be aware of. If you're getting unsolicited calls or advertising saying it's an easy application process, that should be a warning sign. It's not an easy application process. There's a lot, like I said, there's a lot of rules and regulations that are surrounding this. Even though there's very little guidance by the IRS, so it makes it even harder. Any promoter that are saying that they can determine your eligibility within minutes, again, it may be possible. I've seen it, but it's not something that you want to go in with the mindset that, oh yeah, of course they can tell me I qualify in minutes. There's more to it than that. Another one is there's large upfront fees to claim the credit. This is why there's so many promoters chasing after taxpayers and trying to convince them to make the filing, because they get their cut up front and they don't have to deal with the blowback afterwards. More warning signs. The fee is based on a percentage of the refund, so that's kind of in relation to that large upfront cut. It's based on a percentage of what they can get you back, so they're incentivized to inflate your claim. Any mention that it's just that they qualify before they get to know your tax situation should be a red flag. There's also some preparers that are some ERC preparation firms that are basically saying, hey, you have nothing to lose, just roll the dice, go file it, the IRS isn't going to catch you, just chance it, there's so much money that you can get. That's extremely aggressive, and I would never recommend that. And then promoters just straight up lie about eligibility requirements. So that kind of ties into something we talked about earlier, where they kind of tell you that they can let you know whether you're eligible within minutes. They might just not know all the nuances, or they might not know about the eligibility requirements, because I can tell you just from personal or professional practice that there are a lot more nuances to eligibility than meets the eye, and just because certain taxpayers have seen some parts of their business expand doesn't necessarily preclude them from filing. I mean, there's just a lot of facts and circumstances that drive eligibility. So a lot of promoters will just omit things to hope to get you to sign on and claim large credits so that they get their large fee. So that's it for this quick update. Really, it's just to serve as a warning. Beware of shaky eligibility claims. Anybody that tells you that they can just determine whether you qualify within minutes. I mean, they might be doing the gross receipts test, but honestly, there's a lot more that you might be eligible for if you engage a preparer or a professional that is actually well practiced in this. These credits have an extremely high audit risk, and if you're determined to have received the credits or received ill-gotten funds, then you're going to have to repay the funds with penalties and interest upon the conclusion of the audit. So please consult a trusted advisor. That's it for this episode. If you like this content, please like the video, subscribe to my channel, and comment or email me your thoughts. Thanks. Bye.